Yes, good morning. This is Andrew from My Investors Place, and My Investors Place is a website for social networking for investors. And what we do is we discuss ideas, or we're looking to discuss ideas. We're just starting for like-minded investors, and to network, make friends, and to really learn. And this video that I'm posting actually is an outgrowth of a blog that I have called Capital Investor 1836, and I guess possibly facetiously, I made a statement in the blog: who's going to bail out the U.S. government? It seems the U.S. government has been bailing out everyone from Fannie to AIG, and really the question came to me, I was kind of thinking, is who's going to bail out the U.S. government? And the obvious question is either there's going to be a printing press that's going to run, and which is going to increase inflation, or the taxpayer will. But there's a lot of really I don't want to say interesting, but maybe scary facts. And I dug deeper, and they're very concerning issues. Firstly, before the U.S. government can bail anyone else out, they have enormous money problems on their own. That's the first issue that I'm not sure if everyone really realizes. The government is more in debt than Fannie, than AIG, and whoever else, whoever else they plan on bailing out. The national debt is approximately $9.6 trillion. That's trillion dollars currently. It's an unbelievable, mind-boggling number. But you know what else is pretty bad is that this huge number, this $9 trillion, $9.5 trillion, it grew by $4 trillion over the current administration of Bush. And putting that into perspective, an issue is just think about the interest that must be paid on it. And I came up with a figure after researching it. It's something like $230 billion a year. Taxpayers are on the hook. And maybe that's one of the reasons that interest rates are at one of these lowest points since the World War II. It's unbelievable what a short-term interest rates are going at now. And worse yet is you have the federal deficit for the fiscal year ending in September 30th, which is knocking on our door, is expected in the range of $400 billion. And guess what? That's close to an all-time high. And I'm sure that you're asking the same questions that I'm asking, and we're all kind of nervous, and everyone is trying to figure out what to do. But where does this all end? And basically, the government came out with all types of statements. And it led to the impression that some of these companies, for instance, AIG and Fannie, they're just too big to fail. And then you could be facetious again and say, is the U.S. government or too big to fail? I mean, this has been one of the safest vehicles ever that everyone's flocking to. And what is another little point that I'm not sure how many of you are really aware of, all these derivatives that are floating around. These are unregulated securities. They have counterparty risk. They have, it's a nightmare scenario that banks have been working amongst themselves. And there's about $62 trillion. It was in Bloomberg on Sunday night. I think that was one of the reasons why Lehman was allowed to fail, because they thought that was a potential that it could be covered. But there was a statement that came out yesterday which almost is like insult to anyone's intelligence, where Dana Perino from the Bush administration came out with a statement and said, the market is alive and well, and we have systems in place in our country to be able to deal with the shocks of systems like that. And maybe she's right. Maybe all the central banks getting together has made a difference. I kind of doubt it. I want to believe it, but it's still, it's still hard for me to believe. And I'll just give you the next issue. And that goes to the point of the FDIC, that our money in the banks are insured up to $100,000. And, you have to delve a little bit deeper, not take things at face value, do some research. And the fact of the matter is that the FDIC has approximately $50 billion, or had $50 billion, a little bit more than $50 billion the start of this year. And then the question is that really enough for every depositor? Or is it just the confidence? But dig a little bit more deeper, get a little bit more concerned. There was a bank, it was a mortgage bank, that was lending with one of the head of the subprime group called IndyMac, and they blew up to the tune of about $10 billion. There were several other smaller banks that blew up to a little bit smaller numbers, but now all of a sudden here we are at the crux of this, or the apex of this problem. You have the FDIC has diminished their arsenal of cash. Maybe they have something like $35 billion. And the question I have is, how is that going to really secure every investor in the banking system? And going on with Dana Perino, what she said is that we have systems in place to shocks to the system. You know, I wouldn't want to see the faces of people standing in line to take their money out of any of these banks. And again, sadly, as opposed to being facetiously, who's going to bail out the U.S. government if we have this problem? And I'm very concerned, and I think we all need to be concerned, and I think we need to have a plan and not just run and go buy gold, and really think things out, what we need to do, and get together as Americans. Thank you. This is Andrew from My Investor's Place. We are a social network site for investors. I welcome you to blog. I welcome you to comment. We're trying to develop like-minded people and meet people and network. So if you want to join us, please, it's www.myinvestorsplace.com. Thank you, and have a great day.